Welcome to the Defense and Aerospace Report podcast. I'm your host, Vago Muradian. Our podcast is brought to you by Bell. Since 1935, Bell has been redefining flight. Learn more about its pioneering spirit at bellflight.com. Later in the program, Bell's Keith Flails joins us for a look at the company's Invictus 360 aircraft that was down-selected, along with Lockheed Martin's Sikorsky by the U.S. Army for its future armed reconnaissance aircraft. But first, the nation and the world continue to grapple with a worsening coronavirus pandemic. As we tape this on Sunday, more than 125,000 Americans have been infected and 2,100 have died, the figure having doubled in just 2 days. To mitigate the economic impact, Congress passed and the president signed the $2.2 trillion CARES Act, the largest single stimulus package in American history that includes funding for U.S. air carriers, as well as Boeing, that's been brought into an existential crisis given its 737 jetliner is still grounded. Now that CARES has been passed, the U.S. response for the crisis totals more than $6 trillion. There's talk of a massive fourth package as governments around the world are responding in kind with their own extraordinary efforts. A whopping 3.3 million Americans filed for unemployment insurance. Stunning analysts. Air travel is down 92%, according to TSA, and the International Air Transport Association is estimating that revenues by air carriers will be down by about $350 billion. That's driving companies big and small to change earnings projections, especially anyone associated with the commercial aviation enterprise and the aftermarket. U.S. military ships, including the carrier Roosevelt, has been docked off Guam, and the Macon Island Amphibious Ready Group has been blocked from returning to San Diego, given the number of reported coronavirus cases on the ships. Joining us to discuss this action-packed week are Dr. Rocket Ron Epstein of Bank of America Merrill Lynch, Sash Tusa of the independent equity research firm Agency Partners in London, and Richard Abalafia of the Teal Group Consultancy. Guys, thanks very much for joining us.
Good to be here, Vago.
Thanks for having me, Vago.
Always great to be on, Vago.
Great to have all of you guys on. We appreciate it. Ron, start us off. How are markets responding to the stimulus package and the news that 3.3 million Americans filed for unemployment insurance? And what does this all mean for the supply chain and Boeing in particular, especially given Dave Calhoun's comments, which capped off sort of another volatile week?
Just to use the Dow as a broad measure, you saw, I think, probably the biggest rise in the Dow in a given day, maybe in the Dow's history, on Thursday, after in anticipation of the package. Then on Friday we saw the markets kind of sink again. So it was, I think there was it gave some support to the markets. The markets rallied on it, and then you saw the market start to fade it on Friday. And then always remember, in these weird markets, when you go into a weekend, people start covering, changing positions. They don't want to go into weekends with strong views on things typically, so that can kind of make the Friday dynamics sort of weird. I think we'll see on Monday the markets response. The futures right now are looking down, but they could change between now and Monday morning. Anyway, on the commercial suppliers, we took down our outlook this week for the commercial aftermarket to down 50% this year in 2020. Could be worse than that. And that kind of flows across all the different suppliers. On the Boeing front, Boeing stock was particularly volatile this week, right? I mean, at one point it was below $100. At one point it was above $170, and then it closed the week around $150 and change. So it was a very, 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 very busy week for Boeing. And then you mentioned Calhoun's comments. It's just kind of interesting, right? I mean, Boeing made some noise around seeking government support, and then at the end of the week, they said, "Well, actually, we don't need it. We can do this on our own," which was interesting messaging that maybe they didn't want the strings attached to the government money that has some ties around buybacks, dividends, levels of employment. Maybe it's a public negotiation. We'll see, but I think that was kind of a surprising end to a week that started with the market becoming a little more bullish on Boeing, thinking that, Boeing, if they needed it, could get bailed out on some level with federal funds.
It was interesting, the number of senior executives I talked to who were really irritated by that statement by Calhoun, because their sense was, look, we're all in this together. Folks are doing this for you so that you can do for us. And it may be easy for you to get capital, maybe, but it's maybe a little bit less easier for the rest of us to get capital. So that did raise a lot of eyebrows. Sash, let me go to you. Give us a European perspective, especially in the wake of warnings from a number of European companies. SAFRAN, one of the world's leading aerospace companies, has said that aftermarket bookings will be down 35 or more %. Talk to us about sort of the reaction to this massive package here, reaction to efforts from British, German, other governments, and then the warnings and sort of the projections we're seeing. Give us sort of a sense across all of those pieces.
Look, it was a phenomenally volatile week. Stocks were up and down 5%, more than 5% in any given day. That sort of thing normally is, even in the aerospace and defense sector, unheard of, because that is huge volatility. And this week I think we've had 4 days when most of our stocks have been up or down 5+, 6, 7% in of a day. The reaction to the US package actually was muted. I think that there is a slightly pretty widespread view in Europe that it's not going to affect the global aerospace industry materially. It may save a couple of US airlines, but remember, US airlines are terribly unimportant in the scheme of things for the civil aerospace industry now. US airlines in a good year are 20% of demand. In a bad year, they're in single figures. So this is pretty immaterial. I think what was really interesting, probably the single most value-added comment that came out this week was from SAFRAN. I mean, I counted 4 profits warnings this week: Rolls-Royce, SAFRAN, MTU, Airbus. They've all said that they're suspending production for various periods. But SAFRAN, Philippe Petit-Colin, the very, very highly regarded CEO, was absolutely clear that they are already seeing aftermarket bookings down 30-35%. And this is only going to get worse. Our interpretation now, I think we're going to see the aftermarket deteriorate the second quarter, third quarter, probably even the fourth quarter as well. Aftermarket is always the first quarter to turn down, the first segment to turn down. The original equipment side, which is a much slower responding part of the business, will probably only turn down sometime in the second half. And I think the other interesting comment from SAFRAN was where the company was asked, are you seeing any reduction in deliveries of engines to Airbus? And Petit-Colin said, we're seeing no reductions yet, i.e., it's only a matter of time. So our feeling is that the production rate cuts that we're seeing in Europe, Rolls-Royce, Airbus, MTU and SAFRAN, but particularly Rolls-Royce and Airbus, because they're very much the top of the pecking order. Airbus is suspending their wing production for 2-3 weeks as they sort of sort out wing production in the UK and Germany. What that presages is the start of some quite significant, but probably quite sustained production cuts, because they won't come back at the same production rate that they went into the cut at. So this is, we talked about this a bit last week. We're seeing production cuts by stealth going on by the OEMs. You've got Boeing shutting down the wide-body lines in Seattle as well. They won't come back at the same rate, but they don't want to say they're cutting production yet, because that would compromise their negotiations with the airlines. And they need to be able to say, we can produce the aircraft. If you can't take them, then that's your problem, and you've got to bear some of the cost of that.
Richard, talk to us about your sense, as well as where traffic figures are. That's an extraordinary number from the Transportation Security Administration of a 92% reduction. It was funny that as we were waiting to start this recording, you're outside in a park, and all of us heard an airplane go over your head, and we got very excited. Everybody got very excited. Talk to us a little bit about what all of these latest figures mean and what it means for production coming back, right? This large unemployment figure is in part driven by, as Sash said, a lot of stealth cuts by companies, right? I mean, they're mentioning, furloughs and a whole bunch of things they're doing to safeguard their businesses, but hidden in there is headquarters staff being cut by 250. We're eliminating 120 positions. We've got 500 outstanding positions we're not going to fill. Talk to us about where we're going in terms of some of these dynamic factors and whether they could actually be worse than actually people might think.
I think you've got a number of issues there. And yes, absolutely. Seeing that jet overhead and you guys hearing it did kind of remind me of that scene in 28 Days Later, which of course is looking more and more like a documentary about a zombie pandemic rather than just merely a science fiction film. I think you've got this feeling that in addition to being cuts by stealth, we've got to keep an eye on what the natural level of organic demand will be for jets as soon as the disruptions and the immediate cutbacks take place. And the answer is the direct translation of supply and demand should be that zero jets are needed this year and next year. Have a nice day. Obviously, that can't happen. That won't happen. Many things get in the way. So you think of what are the mitigating factors. And one mitigating factor is, as my good friend Adam Pilarski put it in a speech he gave earlier this year, hooray, we're incompetent. Basically, the ramp up would have been so much greater with Airbus, with Boeing, if their production problems and of course the MAX problems didn't take place. We'd be coming down from a much higher place and there'd be even more of an overcapacity situation. The other thing that might soften the, quick race to the bottom in terms of rates might be the assumption of a synthetic market. If Boeing and Airbus do accept government aid at the end of the day, then you're going to have this, if you will, artificial market that allows for the production of aircraft, even if they don't have immediate end users, or even if the end users just park them because they've been paid for. I think there was one analyst who's just suggested that let's be done with this. Let's have European governments just buy 500 or 600 Airbus jets and then lease them out at some point. So there are all kinds of mechanisms that are being contemplated that would keep us from collapsing to zero. Part of it is the hangover of whatever remaining demand there was from the undercapacity days, and part of it is the arrival of a synthetic market in the form of government aid. Headcount is a really interesting one because, as you know, the $17 billion that was offered in theory to Boeing as an upfront, a support mechanism included the provision, in addition to worrying about diluting equity or any other terms that might make it less appealing. I think the Boeing folks were also mindful that that proviso included a demand that there'd be no more than about 10% headcount reduction. And of course, part of the exercise in reducing rates would be, and responding to this catastrophe, would be very definitely headcount reduction. So they need to work through that and determine whether or not they can find the sort of happy balance where they cut production, but keep it going then more than it should be, which again is zero, using government aid without that government aid mandating that they don't tighten their belts at all. So it's going to be a really interesting walk moving forward.
Sash, do you want to just sort of add to that before we change gears?
Yeah, I just had one point to add to Richard's. And I totally agree with what Richard was saying there. But I think the other lever that can be applied to get airlines to take aircraft that they don't really want is vendor financing. And I remember in the recession of 2001 to 2003, which you'll recall was 9/11 meets SARS, what helped Airbus, but also Boeing, to stabilize production was effectively financing their customers and financing the delivery of aircraft. And from memory, Airbus's vendor financing went from a few hundreds of millions to $4.5 billion of vendor financing, and Boeing's pretty much doubled to about $14 billion of vendor financing. Now, those both came down then over the subsequent 5-6 years or so, but they just threw money at their customers. And I'd go back to one of the comments that Airbus made last week, where they said the lessors are generally behaving well and they are funding a lot of aircraft that, my parentheses now, the airlines don't really want. But some of the small lessors probably are not. And if we see the lessors' enthusiasm for these assets dry up, then the only lever that the OEMs can use is to finance the aircraft themselves. And therefore, I would watch out for their balance sheets, because I think it's their balance sheets that are going to be used to try to smooth this horrible downturn.
Let's try to look at this. Want to get you guys' broader take on what a potential recovery might look like, right? I mean, there's been this, is it going to be V-shaped, W-shaped, sawtooth down, what have you, abrupt rebound. But if you look at 3.3 million people having filed for unemployment, and then actually an enormous amount of pressure building by the responsible air travel movement, sort of saying, hey, look, we should still be pushing for more eco-friendly airplanes, right? Low fuel prices, as we've discussed on this program, augur for folks to actually not press ahead with some of the more efficient fuel-efficient aircraft design. And at the end of the day, the naming and shaming of why are you traveling unnecessarily and creating more greenhouse gases? How does this whole dynamic scenario play to whatever recovery looks like?
Let me jump in. Is that all right?
Sure.
On that point, the first thing is, my sense is you probably don't see a full recovery until there's some sort of vaccine or something that makes people comfortable to travel, right? Kind of if we get through this phase of this, what's to say there's not going to be a second wave, and are people going to be comfortable in tight quarters with other people? I mean, there's a whole psychological aspect to this. So, in one sense, I think there's an epidemiological solution in a vaccine that would make everybody feel better. And that's not just in this industry, across the board, or people want to,
Right.
60,000 people want to go in a stadium and watch a concert, so on and so forth, right? So you've got that whole angle on it. Respectfully to the responsible travel movement, they're kind of on the back burner right now, at least as far as I'm concerned. I mean, there really is broader concerns than that. I mean, the reality is, and has been, in case, air travel is not a big fuel burner. And with the bigger economic issues in front of us across multiple industries, again, respectfully, the last thing I worry about is getting flight shamed, when there's basic needs to just travel for business or whatever. Maybe the other guys have a different view on that. Probably.
No.
It's more
No.
comfort of travel.
Before we stop worrying about that, let's think of all the other marvelous things we could worry about. I mean, this is, at this point, it's like a flock of black swans traveling marvelously in formation. ESG and shaming, no one's really heard of that outside of Europe or Middle East Middle East and Asia, nobody has heard of it at all. So
Right.
it's not going to be a factor. I'm not even so sure we've heard of it in the US. And when things do come back, if you try to get in the way of somebody who's going to see family they haven't seen in a year and a half, they're kind of going to get punched, right? Now, the other factors to think about that are far more onerous, this oil shock, according to many accounts, looks like it's going to play out over a very long period of time, because neither Putin or MBS are famous for blinking, and they're playing a game of chicken. So the idea of $25 a barrel oil is going to take so much of the shine off of appetites for new single aisle jets. That's going to be really painful. And then the third black swan, actually there are many other smaller ones, but the third black swan is very simply, this is going to be an enormous recession in discretionary spending, whether it's on business travel or whether it's on personal and leisure travel. It's going to take a heck of a hammering. So you ask about the shape. I was of the feeling it was U-shaped. Now I'm like some horrible hybrid of U and L, with a sort of gentle upturn of the floor of that L. So this is going to take some time.
Sash?
Yeah, I'm with that. It's a bathtub, down, then down for a long time, and then starts to recover. And the ESG aspects just get pushed onto the back burner. This is not their year, and next year probably isn't either.
Let's go to what a fourth recovery would look like. If you look at some of these unemployment figures, there is a sense, and lawmakers, as we've discussed on our podcast, especially the Washington Roundtable, it's sort of out there that people have an eye on it. Are folks on capital markets looking for what a fourth tranche of relief looks like at this point, Ron? Are folks starting to talk about that at all?
I think that's been in the backdrop for sure. Specifics of it, not really.
Right.
No, not yet. But I think there's an expectation that that's kind of bubbling up, and that'll be the next thing. I think the thing that the market's starting to figure out now is, this might take a little longer than we thought. Right. And I think that's becoming part of the market reality. And we'll see that over the coming weeks. And that's going to, as Sash alluded to early in this podcast, is going to fuel continued volatility in the markets. In particular, any sectors that are highly sensitive.
If I could just kick into that, I mean, it seems that we got to look at it from a macro perspective. The U.S. economy is what, 18, 19 trillion, of which probably the plurality, if not majority, is non-functioning. So whatever trillions are kicked in through these packages are compensating for that. The answer is, if this is a year and a half and 2/3 of it isn't functioning, that's a lot of, trillions of dollars.
Sash, let me bring you into the conversation and have you start us off on the defense side of things. There's this sort of sense that this is a purely commercial crisis and that governments will continue to spend on defense at a prodigious rate. That seems to be the case in the United States, but it increasingly seems as though if everybody's economic sales are trimmed, that's going to have defense implications at the end of the day. There's already talk that there's going to be there's some news, and would like you to talk about the UK Strategic Defence and Security Review, but also how things could fundamentally change on the UK as well as on the European side of things.
I mean, to some extent, I would respectfully suggest that the reason why you're still talking about everything defence-wise going ahead at full pace in the States is you're probably between 2 and 3 weeks behind, certainly Europe, and a couple of months, month and a bit behind Asia. And as things get worse, then defense starts to become just an area that funds can be withdrawn or needs to be withdrawn from to pay for the massive cost of dealing with coronavirus. That's certainly the mood music in Europe. So, couple of small examples of that, but which are very, very interesting. One, I think you talked last week about the degree to which the Roosevelt carrier group in particular had an outbreak of coronavirus and therefore was becoming decreasingly functional because of this. This has quite important implications, for example, for the workup of the UK's carrier strike capabilities, with both the HMS Queen Elizabeth and HMS Prince of Wales supposedly due to do a series of quite complex sorties over the next 12 months or so to test their air wings and so forth. It's just not going to happen if they can't go out more than a couple of hundred miles, and certainly if they can't go as the Queen Elizabeth did on last autumn, all the way over to the States and to do the exercises there. I think that increasingly defence is going to have to focus on a European context, within home waters, home airspace, and land. I don't think we could assume that armed forces are going to be able to deploy with very little notice, with no concern whatsoever for the implications. It may be that we can't deploy a lot of armed forces. Second issue, specifically the UK Strategic Defence Review, there's some very, very well-informed comment, including from Alex Ashbourne, that SDSR is looking as if it's going to be delayed. It just gets put on the back burner. And my comment would be, it's all very well wanting to do a defence review. Boris Johnson won a huge majority in November's general election. But the fact is, the main efforts, to use the military term, of the UK military has shifted fundamentally from sorting out its budget, sorting out its focus and so forth, to supporting the United Kingdom government and supporting the people of the United Kingdom coronavirus. Nothing else matters. SCSR probably gets delayed a year. And by that stage, let's be absolutely clear, anything that the UK is buying in dollars looks a ton more expensive. All those US contracts, Apache, P-8, Wedgetail, training for all of those, F-35, look brutally expensive down at sub 120 compared to when sterling dollar was 135 plus.
Ron, Richard, anything you guys want to add on the defense side of the equation? I would also parenthetically say, right, Raytheon, the purest of defense contractors, has now become increasingly dependent on commercial at the very time the Justice Department has approved their transaction, which is what happened last week.
I was going to say, boy, I'm sure there were a couple of people up in Massachusetts who were saying, God, please don't let them approve. Please don't let them approve. I mean, it's just
too late.
Wrong.
Too late.
Yeah, too late. It's yours, But boy, that whole idea of pure play being the only way to be in town, that's nothing. I don't think I certainly wouldn't have guessed as the right strategy a few months ago, and I don't think anyone did. But the idea, Sash, that the U.S. is a couple weeks behind, you might be right, but we've never really done resource-constrained defense. We just haven't. And maybe that's a function of being, the reserve currency. Maybe we're just politically dysfunctional. I don't know. But we just don't do resource-constrained defense. And I'm anticipating a budget environment which, if not exactly growing, then is not going to suddenly be pared back to pay for something else. It doesn't make a great deal of sense to cut back a $170 billion procurement budget when you're spending $6 trillion and more. It just doesn't really do much by way of drop in the bucket. And you're going to see perhaps a switch, shovel-ready projects, jobs right now. So building existing stuff rather than the sort of advanced next generation systems. But in terms of actual top line constraints, I'm not seeing it. I hope I'm right. I might not be.
And of course, it's an election year, right? So nobody wants to reduce defense spending in an election year.
If I follow on to what Richard said, I don't think we'll see defense as a sort of source of funds in the U.S. Right? I mean, particularly in this environment, it just use the F-35 as an example, right? F-35 is sourced out of all 50 states. So if nothing else, defense is a very equitable way to distribute stimulus across the entire country. In fact, I wouldn't be surprised if you saw defense plussed up in this environment just because of that. And to Richard's comment, shovel-ready stuff probably is, I would imagine, what would happen. Probably a bigger risk is, however, and it's not exactly risk to the end market, but work disruption. That I could see happen, where a plant in Fort Worth or a plant here or a plant there has to shut down for a period of time related to the virus, and you could see work disruption and that kind of thing. But I'm not expecting the end market itself, at least the domestic end market, to be disrupted. Now, as a follow-on to what Sash said, the U.S. contractors, as we all know, have substantial international businesses. Those international businesses could be disrupted for all the reasons that Sash said. So, I think we have to be cognizant of that. But the U.S. piece of the business, I'm expecting to be okay, if not even a little better.
U.S. Army is pressing ahead with its programs, announcing FARA, the Future Armed Reconnaissance Aircraft. That came right after the Future Long-Range Assault Aircraft. Bell, our sponsor, but as well as Lockheed Martin, Sikorsky are moving ahead. Any thoughts on that as both of those programs kind of move ahead?
Well, they picked the two major U.S.-based helicopter contractors. So, in one sense, they went low risk, and then going down the low risk path, they have a low risk solution and a higher risk solution, right? One, just sort of a more standard helicopter layout, and then the other one with the counter rotating blade setup. So it's, within the low risk path, they have a little barbell. So in the end, I don't think it was all that surprising. But like I mentioned, I think the Invictus in the end will get it all, but we'll see.
Okay, and one quick ending point. President Trump invoked the Defense Production Act. We're going to talk about this a little bit later in the program. There were commercial manufacturers who had lined up. General Motors, for example, had partnered with Ventec. Those companies were kind of moving ahead, and the president has a tendency of sort of conflating things and using announcements for his own ends at the end of the day. Does the invocation and the broadening of the Defense Production Act really move any needles on the street or anywhere else? And that's more to Ron and to Richard, although Sash, you're welcome to pitch in as well.
I don't really think so. Other than just maybe some perception stuff. It's not really going to move any needles for any of the defense contractors or the commercial aerospace guys. So if, for example, Boeing made a decision they wanted to start making ventilators, I don't think that would actually move Boeing's numbers all that much. So from a financial perspective, not so much. From a goodwill perspective, and maybe winning hearts and minds, it could have a value. But from the financial front, no.
Yeah, and we should point out General Motors Defense is one of our sponsors. Go ahead, Richard. You get the last word.
Thank you. It's all a bit bizarre because I don't know of a lot of people who are saying that there are big production constraints on these things. It's resource constraints, which means, they're balking at spending $1 billion, not a great deal of money in the scheme of things, on, alternative production arrangements. Why don't they simply spend that on current production arrangements? Just saying, okay, everybody who's doing this, do more of it, put on a third shift. It all appears to be a lot of political theater rather than something that would actually do good. Spend money, you get good results. Don't spend money, bad things happen. That simple.
And at the expense of belaboring this and adding another minute to the podcast, Sash, before we go, Richard, I'm sorry I said you get the last word, because now Sash is going to get the last word. I know I'm guilty of this often. The European response to this crisis has been that there's been greater nationalism. So on the 25th anniversary of the Schengen Zone, instead of keeping borders open, countries have been closing their borders. And countries like Italy have found that their closest allies are not helping them. And so they've had to get aid from Russia and from China, of all countries. At the end of the day, what does this mean for recoveries, given that nations have a tendency of remembering things like this, both being helped, but also not being helped in a moment of need?
Europe isn't coming out of this terribly well at the moment. The European system, the European structure isn't there to help companies. And every single country is doing their own thing. There is a tiny transfer of resources and assets across borders, but in general, it's conspicuous by its absence. And that's very, very sad. And what is fascinating about this is that the two countries that really know how to play soft, mixed, green-gray power, China and Russia, are making like bandits. Russia would always have supplied aid if they could to Italy, because the Russian-Italian nexus is an astonishingly strong one, has been since the end of the Second World War, when the Italian Communist Party was probably the single strongest, certainly single most virile party in the Italian political system. And we saw that all the way through the 1970s and into the 1980s. And the Russians have done a brilliant job of sending, by military aircraft, sending complete formed military units to try to help the Italians. It's a great play. It's really frightening for anybody who's thinking long term in Europe. And the Chinese ditto. The Chinese are playing a much longer game, but their propaganda is very, very good. And of course, they've just got a much bigger manufacturing system, which is able to produce protective personal equipment in huge quantities, just at a time when Europeans want it. But you're absolutely right. Europeans are going to remember that. And this is going to make reforming a single political position against either of those two countries much harder in the years ahead. And China and Russia have done a superb job, and will probably continue to do so, of driving a wedge between European countries and driving a wedge between Europe and the US. And that's a problem, certainly for all of us on this podcast, because we have a particular worldview that doesn't favor that.
Guys, thanks so much for joining us. Really, really appreciate it, and hope everybody out there stays safe, especially as the toll mounts. Thanks so much for joining us.
Thanks, Vago.
Great to be here, Vago.
Our podcast is brought to you by the Bell V-280 Valor, bringing the mission technology of the future to the battlefield of today. Visit bellflight.com for more. And joining us now is Keith Flails, the Vice President for Advanced Vertical Lift Systems at Bell. Keith, thanks very much for joining us, and congratulations on the win.
Thanks, Vago. Appreciate the opportunity to talk today. And it's a very exciting day for Bell as we get ready to move into this next chapter with the United States Army.
That's right. I mean, we should point out that last Wednesday at exactly 5:01 p.m. or 17:01, the U.S. Army announced the decision that Bell, as well as Lockheed Martin's Sikorsky unit, would move ahead in the next phase of the Future Armed Reconnaissance Aircraft Program, the FARA. Talk to us a little bit about what's next for the program.
I'm very, very excited to get through the down select here and be one of the companies to move forward to support the Army on the Future Attack Reconnaissance Aircraft Program, a critical element for Army modernization as they prepare for multi-domain operations. So we at Bell, even pre-down select, understanding the schedule as it was laid out, understood in order to support our Army, we had to lean forward. We had to staff to a high level to get the work done so that we can stay on schedule. So we've had over 250 folks working in advance of the down select, and we're continuing that work and continuing that ramp to get the work done that we need to. So as you would expect with a program like this, the cycle of what you have to go through for preliminary design and then detailed design so that you can make your parts and build your aircraft, test, and get ready for flight. It's that typical sequence, but the cycle by which we have to perform on this one with all the learning we had, B280, having to move through that even more quickly. As we've been in the blackout period with the Army, as they've completed their evaluation, we've continued to progress on the technical maturity. We've completed several subsystem preliminary design reviews, getting ready for air vehicle preliminary design review, and then after that, move into detailed design towards critical design review. All those things that are necessary with those interim milestones, such that we can have an aircraft on the ramp in the fall of 2022 for first flight, continuing to drive to be the most affordable, most sustainable, lowest risk, least complex solution, ensuring we meet all the requirements. So maintaining that focus on affordability and sustainability as we go forward and bring this next generation machine with incredible performance and innovation to the Army for these critical MDO.
You guys certainly have taken sort of two strategic roads, right? On the V280, you have an advanced tilt rotor concept that's different than the V22 that you guys have been known for a long time, a product that you guys build in partnership with Boeing. But with the Invictus 360 design, you guys are much more of a traditional helicopter approach. You and I had a great conversation and a tour of your guys' model at AUSA last year, but I know that you guys have continued to work on the concept. What are some of the other, I mean, why is it you think that something that looks like a traditional helicopter is as innovative as it is, right? I mean, what do you tell people when they look at it and they go like, okay, well, that looks like a regular helicopter?
A lot of what we've focused on, again, through our analysis, through our modeling, a lot of the features that we pointed out on the aircraft before, you know, starting at the nose of the aircraft and moving back from the tandem cockpit, the lift sharing wing, the fully articulated rotor system with heavy leverage from the 525 program that really helps us on the risk and schedule to bring that capability, the active horizontal stabilizer, canted ducted tail rotor. So it's really a combination of all those features harmonized with the fly-by-wire flight control system. And as we integrate all those things together, look at our analysis, look at our wind tunnel data, all those sorts of things that are really, really focused on drag reduction and that harmonization so that the aircraft is in the most appropriate attitude through the different aspects of the mission profile so that we're able to meet all the requirements. So at Bell, we, pride ourselves on, the elegance of simplicity. So I say that, and that does not mean that this is not a high-tech, next generation high performance machine. The point is that you go through the difficult work and the non-recurring engineering to drive as much simplicity into the aircraft as you can and turn those design knobs so that you're getting the least amount of drag and you're getting all the performance that you need out of the aircraft. So very proud of how the team has collaborated and worked together to do all those things to get that sort of performance out of the aircraft. We've talked about the lift sharing wing and the way we're using that and leveraging that 525 main rotor so that when you get up to speed, the lift sharing wing is carrying a lot of the aircraft, turning the rotor system into a very efficient propulsor. So it's all about the voice of the customer and listening to them and understanding what the requirements are, and given what the requirements are, we're trying to answer those requirements in the most affordable and sustainable way, understanding the Army has a lot of bills associated with modernization. So whatever we can do as a company to ensure they have a high-performing machine, but that it's sustainable and affordable over the long term, because this aircraft will be in the fleet for decades. Operation and support costs drive a lot of the cost of the Army once you get these fielded systems. So looking at our rotors, looking at our gearboxes, and how dynamic components on rotorcraft are largely the cost drivers. We prided ourselves on getting the most simple configuration possible that's going to achieve all the requirements that they need, so that we didn't need to add extra fans, we didn't need to add a pusher, we didn't need to add those other things that they're going to have to pay for and sustain over the life cycle, but still make sure that they get the performance that they need.
Let me just ask before you go, has the COVID crisis changed how you guys are operating in any of these decisions?
Great question. So for one, I think you're probably familiar with the letter that Ms. Lord put out as the USD AT&L national critical infrastructure, kind of helping define, there's been a lot of varied guidance, city to city, state to state, county to county, in terms of the rule set of how we should be behaving and operating as we deal with COVID. And I think that has helped clear some things up in terms of, what our expectations are, as we're a company that supports military defense, and I actually on the commercial side, supporting first responders with a lot of things we do over there. So how do we continue to operate, and how do we continue to ensure that our employees are maintaining the social distancing and doing all the right kinds of things to mitigate the risk? So I think we put a lot of great things in place as a company to look at what folks can telework and work remote, what folks can work part-time from home, part-time here, and what folks actually need to be here. So as we've implemented that, and who's here at Bell, what you see is, it's more sparse in terms of folks that are here in Bell on the office side, so that we can maintain that appropriate social distancing, but using all the tools that are out there in terms of telecoms and WebExes and things like that to maintain our effectiveness. So we're still into this by only a week or two, and bringing out some of the kinks associated with that. But I've been impressed with the response from the workforce, the response from our IT department, working with our customer. It's actually gone very well for my foxhole in terms of working through these challenges and still maintaining our productivity and supporting our military and supporting our first responders.
Keith, thanks very much. Congratulations again, and look forward to staying in touch as you guys push ahead with the programs. Thank you.
Thanks, Vago. Appreciate it.
And thanks to all of you for joining us this week. Please follow our daily interviews with top government, military, industry, and thought leaders at Defense and Aerospace Report. Check out our daily podcasts and subscribe to our weekly newsletter. Follow us on Twitter at DefAero Report. That's at DEFAERO Report. Like us on Facebook at Defense and Aerospace Report. And check us out on LinkedIn. Check out our weekly cyber report sponsored by Northrop Grumman, and our technology report sponsored by General Motors Defense. For more than 80 years, Bell has pushed past the boundaries of what's possible to drive aviation forward, going above and beyond flight. Bellflight.com. Thanks again to Bell for their generous sponsorship, and we'll see you again tomorrow. In the meantime, hope everybody stays safe and healthy.